You're watching Famous Dave on YouTube.
All right then, folks, welcome to the Short Vol Show Live special edition in this week of volatility. And I just wanted to outline a couple of things that we talked about last night. First of all, remember last week the markets were not pricing things correctly. The options markets option prices were way cheaper than actually what happened in the SPX and several options, and they have sought to kind of remedy that situation by pumping up prices, but you're going to have to use your own judgment as far as options prices here, because nobody really knows what's going to happen. Nobody knows what's expensive or cheap. And so you really have to look yourself and try to figure out things a little bit by yourself in this situation here. I would be very careful about doing things like selling wings. And by wings, I mean way out of the money options in, whether it's way out of the money puts, if you've got let's take a look at Tesla, for example. Now, Tesla volatility is pretty high. Of course, we've seen it come from go all the way up to like 960s. 968 was the high, and then come back down to like 600. Now it's back to 700. But I would be very careful about selling way out of the money stuff in either direction, because this stuff can jump up and grab you real quick. Okay, the second point I want to make is just with the VIX. We see the VIX moving lower at this point, currently down a 0.24. We are off of the lows that we opened the session last night with as far as the market averages, the major indices. If we look to the E-minis, which is the one I follow the most, you can pick your favorite. It's all kind of the same thing right now, whether you're looking at the NASDAQ, the Dow, the SPX, but you can see if we go back just to the last day, let me see if I can get this 5-day here. All right, so we can see that last night we opened down here around 28.90, and we rallied through the night, but then we had a big down move through about 7 o'clock, and now we seem to be rallying back again, with currently E-minis up about 18 points. Now, this could move around. If you watch Theo Trade, they were saying that there's sort of a band here between 3,000 down to kind of the lows here, and you should consider that these two areas, if we stay inside this area, then everything is kind of dampening volatility. But if we break to one side or another, it's kind of like all bets are off. in a way here, especially to the downside. So I'd be cognizant of that. It very much concerns me seeing a lot of people buying volatility here. I mean, if we look at a chart of like, let's say UVXY, for example, we can see that if we look at a 3-year chart, we see UVXY moving always lower, right? And we've had a pop, certainly, but in the grand scheme of things, if you look at UVXY 435, now this is split adjusted here to 435 in mid 2017, down, and then we got the pop up to 22. So it's not like it's back to 400. So we want to be cognizant that A, this thing is never going to go back to 400, but B, it's not like a stock that like it can have good earnings and continue to build on its rally here. The only way that UVXY can rally from here is if we continue to move down in a rapid fashion in the market. And, you know, if we close today unched or slightly up, that breaks the trend of several sort of down days in the market. Now, Friday wasn't totally a down day, but, you know, it looks like volatility has reached a recent high on Friday. If we can't take out that high again today, then you could make a case for the thing that we are on for the situation that we are on the downside of a spike here. So I would be very careful about buying anything volatility wise. As far as the stock market, nobody knows what's going to happen. I've said that before. I do expect to see volatility come in somewhat, but it really seems like the days of like a 10 in the VIX are long gone and will be gone for some time now. I don't think we'll see a VIX below 12 again until until such point as we take out the all-time highs again, which seems like a ways before we would take out the all-time highs again. So it really, you know, they were making a case earlier this year for the VIX to have a little bit higher range than before. We know that historically the average VIX price is somewhere around 20, and that seemed really high for several years. In 2017, we had kind of an all-time low of the VIX, under 9, and I think it was like 8.59, maybe it was. But since then, the average range has been moving upward, and I think we will see an average range higher. However, an average range higher doesn't mean that we can't get decay in these products. If we can get back into contango, these things will arrange themselves into contango again quite quickly. But right now, of course, there is a huge spread between the price of the VIX and the futures, and that's something that we need to think about and address, because if the VIX stays here, you know, we're a couple weeks till expiration. But if for some reason the VIX were to stay up here till expiration, it would pull that front month future all the way up towards 38. Right now, the two front month futures are 26.80 and 23.30 in the VIX. So if you're trading a VIX product, you're trading based on those numbers. You're trading based on a 26 volatility, a 23 volatility. You're not selling a 38 because the futures are way discounted to the VIX right now. Let's pull up a VIX central term structure chart here to illustrate that. So here's the VIX term structure. Remember all the time that this is always like about 15 minutes delayed, or it might be less at the moment, but it's certainly delayed slightly. But it doesn't matter because the point is still made. There are over 10 points between the closest future and spot right now, and that is something that we almost never see. It's a very rare situation that we'd have that big a spread. A, and B, an inverted spread of that size is huge, and that is going to have to be addressed in some way. Now, for things to get quote-unquote back to normal, we need to see the VIX go way down and the futures not go down all that much. So I would look to see, even if we get a really big rally, it's going to take a lot of the VIX coming in to get this term structure back to normal again. That is a huge spread that I really haven't seen since I've traded the VIX. I've never seen a spread that big. So I don't know exactly how to handle that. In my mind, it means that the futures traders are discounting the VIX price and thinking that the VIX is going to come in at some point. But we're going to have to wait and see how that situation unfolds. typically in a spike situation, if we look at the VIX once again, and if we look back over the last couple of years and see the major spikes, you can see that these spikes typically have only lasted like one day, the apex of the spike. And ours here looks different. It's lasted more than that. But there is still extreme pressure in my mind for this spike to recede back down quickly. So keep that in mind. Now, the force of this receding back down is going to be largely dampened by the fact that the futures did not follow the VIX up here. So, we earlier this morning we had a VIX down 5 and the futures just down slightly. We need the VIX down a lot just to get the term structure back into shape. So we'll see what happens. It would be great if we can hold today and not take out the lows of Friday. I think that would be a convincing long way towards this down move being somewhat contained. But we'll have to see what happens. It's hard for people to continue at the level of buying and selling stuff in a frantic way that they were all last week. Traders just can't keep up that level of intensity for long periods of time. It's just kind of like human nature. And so I would expect to see things calm down this week. We'll have to wait and see. Of course, we have had a huge range already this morning just in the E-mini. So the range we've had so far before the open speaks to continued volatility. Look at this here. Up to 3,021, all the way back down here, down over 100 points in the E-minis, and then back up just since 3 this morning. So continuing to have a huge range. We will see if that narrows or not. Currently, we have the VIX down 151 as we're entering the day here. Right now we're at 9:09, so about 20 minutes till the open. And gold, very strange action on gold. Gold up 29. We saw gold actually down on Friday, which was unexpected. Let's take a look at a 5-day chart of gold. We saw gold down on Friday with the market, and this was before the market rallied. So, that old adage that it's a flight to safety with gold really hasn't held up. As far as bonds, a flight to safety being with the bonds, well, that certainly has held up. We've seen bond buying last week. People selling their equities and buying bonds to try to put their money in a safe place. We saw that last week, certainly, and that's evidenced by this TLT chart here in front of me. So my position now continues to be short the VIX, short VXX, and you can see VXX hasn't moved down very much so far today. In fact, it's higher than it was on the close yesterday right now, and that is due to the craziness of the term structure, of course, and continue to see some kind of strange movement in the VXX and UVXY are not going to correlate with the VIX right now because of the fact that the term structure is so out of whack. There's a huge spread between the VIX and the VIX futures, and thus it's not going to make a whole lot of sense how UVXY and VXX correlate until things get back in line. Now, certainly, if the VIX is down on the day, you're going to see UVXY and VXX most likely down on the day. If the VIX is way up, you're going to most likely see them up. But we need the VIX to fall by quite a lot before you're going to see any real correlation between these products. And this is all due to the unique nature of the VIX term structure. Remember, with something like the S&P futures, you would never have a term structure like this VIX one. And the reason for it is that there is always an arbitrage situation in the SPX, for example, between the spot and the futures. If we had this situation in the SPX, what people would do is they would sell a basket of stocks and they would buy the futures against it. And people continued to do that until the spread narrowed down to just the interest to carry whatever the price of the future was for that period out in time. So typically you would see just a very small upward slope in the term structure of the SPX or any other term structure where there is an arbitrage situation. But because of the unique nature of the VIX term structure, we can get these situations where this stuff is way out of whack. And that continues to be something that's A, very interesting, and B, something to really watch out for, because you see this 13% here at the bottom of the chart. This represents backwardation, and that represents the UVXY and VXX being pulled upward. All things being equal, these are being pulled upward by 13% per month right now, which is a huge number and is going to serve to make these products actually move higher. If the VIX stays where it is right now, these products will actually be pulled higher. Now, nobody expects the term structure to stay like this for an extended period of time, but keep that in mind. If it does, UVXY and VXX will be pulled higher over time. So there you have it. Once again, I want everybody to, your own situation is yours. I wish everybody the best of luck. Tesla back up again, amazingly. I guess maybe not so amazingly, as it's had a big down run. I am looking to, and this is once again another unique situation we rarely see, where the VIX down 167 with VIX futures up, and that just speaks once again to the inverted roll yield, where these futures are getting pulled up towards the VIX, and even with the VIX down, they're getting pulled up towards it still. So you continue to see that happen until the spread narrows. I mean, right now the roll yield is higher than it was when we were looking at it yesterday. Yesterday it was 10 points. Now it's 11 and change points between the VIX and the futures prices. And that is like a unique thing in the financial world, and it will be very interesting to see how it unfolds moving forward here. Best case scenario for me today is just that we continue to get a rally. I wouldn't necessarily want a huge spike up rally, but more of like a slow, steady rally upward. If we could get like up 30 points a day for the next month in the SPX, that would be perfect for me. I do have on, just to refresh your memory, the VXX March 2017 put spread, and we are poised for VXX to open higher than it closed on Friday, even with the market up here, just due to the nature of the wacky term structure right now. So I'm going to leave you to do your thing for the market. When I named this live trade check, it's kind of analogous to how we would do things at the SIBO, which was every morning we would come in and you would check your sheets, and you would look for any what we called out trades from the day before. So basically, like if you're trading in the pit and you're writing down stuff on tickets, sometimes you're going to write down something different than the guy who's trading with you is, or the brokerage who's trading with you is, and you have to reconcile these differences on an out trade sheet. And that's part of what you do in the morning. You go up to your offices, you check your positions, you make sure that what you have written down or in your computer matches what the bank has, and you get ready for the day. So that's kind of what this is analogous to. For us here, sometimes in the morning we would have some sort of pep talk by the bosses of some sort. That was more rare. It was more just like individuals coming in, putting their jacket away, getting ready to go down to the floor. Maybe if you have some tremendous risk on, you'd have a pep talk, but it was a time where traders could talk to each other. It was one of the only times when I would actually see people from my company, since I was always, just alone in my own little pit. But in the morning was a time where we could kind of talk with other traders and get a sense of what was going on. I encourage you to interact in some way with other traders, whether it be on StockTwits or in one of those chat rooms. There's plenty of chat rooms and ways to interact with people without having to pay $100 a month or something. I think these groups that are charging tons of money to interact with other people are ridiculous, but there is certainly a benefit to interacting with other people, seeing what other people are doing. And I've been sort of horrified to see a lot of people talking about how they're buying volatility here, which I think is a real hot potato. It's very hard to time buying volatility. And we know for sure, the only thing I know for sure with this is that VXX and UVXY will eventually go and take out the lows. They're very far away from the lows, right? And even TVIX will go and take out the lows. I know TVIX is still over 100 here, but all of these products will go back to take out the lows at some time in the future here. So that's a real advantage over over actual stocks to trade these products, because an Apple or something may never go back to 200, but these products, we know that they will go back down at some point. We just don't know when. So use that information to your advantage, and be very careful about. I saw when I look in the chat rooms, I saw somebody say UVXY going to be 30 later this week. This sort of thing, like UVXY is building. The only way UVXY can get to 30 is if we are down another 1,200 points in the Dow a couple days in a row, and that's it seems pretty unlikely to me, and I like to trade based on things that are likely to happen. It's hard enough figuring out what's likely to happen and positioning yourself that way than to take shots. And to me, buying UVXY calls right now is taking a shot against the odds, and that's not the kind of trade I like to make. Good morning, Wayne. Good morning to people in the chat. Hey, what's up, Spencer? Thanks, Edward, as usual, for your moderating help with the chat. We'll see what happens today. I'm kind of looking to add to positions and looking for some sort of trades. If we get another pop, I'm looking at maybe some April stuff in VXX. I was looking possibly at like an April 19-17 spread. I realize that's aggressive, but I wouldn't hold on to it for very long. You could pay 74 cents for the spread that could be worth $2, and look to get out of it with offer it at a buck something, maybe $1.20 or something if we get a continuation of the rally. I truly believe that if we end up on the day, or just within 20 points even in the E-minis of up on the day, if we can just narrow our range today, that's going to go a long way for vol coming in. It's going to be very difficult for the VIX to stay up here around 38. And there's tremendous pressure on the VIX to go lower. And any premium you buy here, once again, is kind of like a hot potato. Owning premium in this kind of market can be a tremendous tool, but you want to be very careful. You don't want to end up owning the premium when the vol comes in. So you want to be very careful, be very selective if you're going to buy any options, and be ready to take that profit and get out of them as quickly as a profit presents themselves. Because once again, premium levels, last week it was too cheap, but now prices are getting higher and higher and higher, and they're almost at unsustainable levels. And the big firms are, as usual, it's not us that controls things. The big firms are the ones who are dominating the narrative, that have more money than us. We fully expect to hear from the Fed. It appears that there's a 50 basis point cut in the works here. I would not be surprised at all to hear from Jerome Powell today about a cut. The government wants to be seen as doing something. I was very critical of the government cutting rates earlier in the year when things were going well, because it gives them less room to cut rates now. Now when we might need it, if the situation tends to get worse with a global pandemic, we don't have as much room to maneuver. I didn't think we needed to cut rates when things were going really well earlier in the year, but it turned into a big political situation, unfortunately, where the politicians got really involved in the market, and that's what happened. So we'll have to see what happens moving forward. Appreciate everybody watching. Looks like we are poised to open up today, and it would be really cool if we break the down move today and the market stabilize. And that's really my position will do well if the markets just kind of stabilize today. And so I'm excited about that. Currently VXX 22.49, so slightly higher than what we closed. Remember, on the close Friday, we just had a big down move in the VIX and a big rally in these products. We're gonna see early on today if that rally holds. Remember, this is all pre-market stuff, and it doesn't really matter. The real volume will come after the open. So be limber, protect yourself. The key, once again, is to live to trade another day. I hope that each and every one of you can make some money this morning, and I will be closely monitoring this situation as well. Thanks for watching, and we will see you next time on the Short Vol Show Live.